Hi guys, Ryan Carruthers here from the betfairtrainingcommunity.com, and in this video of the Betfair Exchange Guide for Beginners, I'm going to be talking about stake management. So grab yourself a drink and let's get going. So I know that this has been a whole series of videos, it's been long. If you've been reading the blog post, it's really big post. The number one thing I want you to remember is that you've gotta protect the bank. I know that wasn't very good English, got to protect the bank. That is the main aim when trading. Very recently I've been reaching out to people trying to promote this series and these blog posts, and people have been saying, oh, do you know what, I just don't know, why it goes against me. It goes against me and I can't trade out. You're not protecting the bank if you're doing that. So over the last 10 years of trading, one of the big mistakes that I've seen from traders is a couple of things. Using huge percentages of their bank because they think that this is going to lead to bigger profits. When on a good run, that is. But let me tell you, with 100%, and I mean, I couldn't be any more certain about this. 3 things in life are certain: death, taxes, and this. You're going to wipe out your bank on a bad run. You're just going to do it. There's no hiding it. It will wipe you out. The best place to start is using a small percentage of your trading bank as your total liability. So like 2 to 5%. So what I mean by that is if you've got a £100 bank, you're going to use between £2 and £5 as the risk, as the liability on any trade. Because if the worst happens and you don't trade out, you're not going to have decimated the bank. It's going to be daft, but you're not going to have wiped the bank out. You're still going to be able to bounce back from that. So one note here is to note down a few pointers about your trade so that you're going to be able to pull it apart afterwards and create your own set of trading rules. Now I'm going to do that in the next video. I'm going to talk about analysing trades. But do not fall into this trap of thinking that you need bigger stakes to make bigger profits, because if you can't handle a smaller bank, 100% you're never going to be able to handle the bigger bank. And the aim here is to build up gradually and build that bank gradually. So you're going to have level, consistent stakes, and it's just going to build up. So the edge that you gain on the market, you're going to see small incremental steps, and that's going to be a steady increase in your trading bank, because the 2 options you have is small, steady, incremental growth on your bank. Long term, you're going to be able to be a good trader. You're going to be in for the long term. You're going to build that bank. So every single week, a month, you're slowly building, and then eventually you get to where you want. Or let's have the other option. Whoa, let's go crazy. Whoa, chucking loads of money at it. Drop the bank, chuck in another 100 quid. Do the same, drop in another 100 quid. It's not sensible. And think about that long-term goal. We want those small incremental steps. I'd much rather you put in 100 quid now and then slowly build it. And then in a year, maybe have 500, 600, £700 in that bank. And then you start to see some really good ones instead of dropping in £100 every other week. So that is stake management. 2 to 5% liability max on your trades. Protect that bank. So the next video is all going to be about analysing your trades.